Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, everybody, Happy New Year. So here we are in January, and I want to talk about the equity markets, and a few themes are going on here. Basically, the market's still in a confirmed uptrend. We are seeing some rotation going on, and we're also most likely going to be in raising right environment. So let's talk about what all these things mean. So basically, in terms of the raising rate environment, everyone's pretty much anticipating 3 rate hikes this year from the Fed, possibly 2. And the banking sector is doing very well, and that's one hot sector that's been moving very well and pretty much has been pushing this market forward, whether it be regional banks, super regional, or big money centers. They all have been doing very well. Now, over the last few weeks, they've cooled off a little, which is to be expected, because basically all these banks basically went up anywhere from 20 to 30% since the election. They actually were moving a little bit slight prior to the election and then kind of confirmed that move, and now over the last 2 weeks they've moved sideways. And that's okay, it's to be seen, it needs to digest those gains. However, we're not seeing any kind of terrible selling to the downside, so that's a very positive sign, so that's a sector to keep an eye on. But right now, just realize it is digesting. Now, at the end of this week, we'll get earnings from JP Morgan and Bank of America, and that pretty much set the tone where the financials continue to the rest of the session. Now, as far as rotation, we saw last week that the money wasn't going into the banking sector. We did see money coming back into the tech stocks. Now, tech stocks did not participate in the rally at all since the election, and same with some of the consumer discretionary, but last week we saw some good money movement. And specifically, I'm talking about Amazon, which was below its 50-day moving average. Reclaimed that over the last few sessions, trying to break through that $800 level today. Apple Computer pretty much breaking out this morning past the 118 pivot point. Again, the stock didn't participate much, but we saw money moving into it last week. Facebook also, for the first time in 3 years, was trading below its 200-day moving average. Pretty negative sign. However, last week, we saw big money flows, and Facebook recaptured a 200-day moving average and is following through today. So that's pretty interesting. Pretty much Netflix also, another large consumer discretionary stock, got up above a 129, 130 pivot point, and pretty much is trading up above that. Google acting similarly, that's actually parent company Alphabet, actually in the same way. Microsoft too, we're seeing money flows in there. Now, some of the small cap fiber optic stocks fell to the wayside. However, semiconductors in general continue to act pretty well, and that's another place you can look where we see some rotation. Other sectors we're seeing rotation is the biotechs. The biotechs had a big bounce post-election day and have pretty much done nothing since then. However, last week again, we're seeing money flow into some of the large cap biotech stocks, and this week we have the JP Morgan Health Conference, and we're going to see if that can spark a little bit of a catalyst underneath some of these stocks. But we've seen some very good movement, specifically in large caps like Celgene. Insight's doing quite well. Gilead's still struggling off the bottom. Biogen's doing pretty good. Amgen's doing pretty good. So those are all some of the names you want to keep an eye on. People are looking for M&A at some of the smaller names like Acadia Pharmaceuticals, that's ACAD. And actually this morning we saw a buyout of Ariad Pharmaceuticals by Takeda. So a lot going on in that sector. So again, it's a rotation away from the hot financial sector we saw into some of these other sectors, so that's something to keep your eye on. And basically, what's not to like when all the indexes are hitting near their high? I know right now all the commentary is obsessed with the Dow at 20,000, and it can't get through there, and it doesn't really matter whether it does or not. It's more important what's going on underneath the hood, and so we're seeing healthy rotations. We're not seeing any negative divergence or sell-off. We just see the general market continue to improve all across the board. So, as always, let price and volume be your guide. None of the names I mentioned should be viewed as a buy recommendation. Please consult your financial advisor to see if any of these trades are for you. I just want to point out to what we're looking at, what we're seeing, and yes, we do own some of the names I did mention, so that's something just to keep in the back of your mind. So, again, as always, let price and volume be your guide. This is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great new year and a great trading week.